In today's video, I will be going over why dividend reinvestment is a great way for investors to maximize returns when they are investing for the long term. So, compound interest is pretty much earning interest on your interest, and this is a very powerful tool in generating wealth. So, it is an example of this would be if you had a bank account with $100 that was giving you a 10% yearly interest rate. The first year you would earn $10 in interest, and the second year you would earn $11 in interest because the second year you are earning interest on your initial $100 and the $10 interest that you generated from the first year. And dividend reinvestment does this with shares of a stock. So you have, say, $100 invested in AT&T, and you get a $5 dividend, 5% dividend, and then your brokerage automatically buys $5 in new shares of AT&T, and it doesn't charge you. At least my broker does not charge me anything for that. And so it pretty much just allows you to be constantly putting more money into the stock, even buying fractional shares. And then in the future, you'll be earning more and more dividends off of those fractional shares, and that will compound and continue to generate you large returns. So to prove this, using AT&T again as an example, I used a site that allows me to graph the total returns of AT&T from 2003 all the way to today, using dividends reinvested versus not reinvesting your dividends. So as you can see, you generate significantly higher returns when you reinvest the dividends. With the growth of $10,000 with dividends reinvested, turned out to be $28,000 at the end of this time period, and without dividends reinvested, only $21,000. So as you can see, $7,000 more just from reinvesting the dividends. The average annual total return for dividends reinvested was 7.41% versus 5.35% without dividends reinvested. And dividend reinvestment just continues to snowball the longer you are invested. So now we'll take a look at a chart for AT&T from 1995 to present with dividends reinvested versus without dividends reinvested. And as you can see, the results are even more significant than from 2003 to present. So with dividends reinvested, you end up with $41,700 on a $10,000 investment. And without dividends reinvested, you end up with $28,900 on a $10,000 investment. I mean, there's a 40% difference in the value from with dividends reinvested and without dividends reinvested. So like I said, dividend reinvestment just continues to snowball the longer that you are invested in a stock. We are going to look at my portfolio and an example of a stock that is great for dividend reinvestment. So that's Realty Income. They are a REIT and they pay monthly dividends. So here are the dividends that I have received from Realty Income. So this is the value when they were given to me. And so as you can see, it started with my first dividend payment of $1.83. And this was back in 2014. And then as time has gone on, these dividends have continued to pile up. And this is without buying any more of the stock. And so now I'm receiving $2.35 in monthly dividends from Realty Income, all the way down from $1.80 or 84. Yeah, $1.83 per month from dividends. So this is all just because Realty Income raises their dividend and I'm reinvesting the dividends and getting more and more shares. So unless you're living off of your dividend income, make sure to reinvest your dividends. It allows you to buy fractional shares of a stock with no trading fee, and it allows for there to be significant compound interest generated in your account. Thank you for watching. Please remember to like and subscribe.